if you can't come up with a logical reason as to why something will impact S&P 500 corporate earnings, then it likely is something that should be faded. If you have to get to some wildly extreme scenario for something to actually impact earnings, that means that the impact to markets is literally just a sentiment hit.
What happens if it turns out that after spending all this money in a year, say from now, it's not that AI isn't amazing, and it's not that AI isn't transforming the global economy. It's just that it's impossible to contain, and that all of the spend gets done. And then it turns out it's kind of like the internet in the sense that it becomes ubiquitous. It becomes part of everything everybody's doing, but it doesn't accrue to any individual player enough to actually create those over-the-top winners.
Pretty much every single government shutdown has been flat. Round trip, 20-ish days, no return, some market gyrations along the way, which basically says, like, don't panic, but don't freak out or do anything too aggressive either. Those other finance podcasts, they are clickbait, but this is clickbait right here on Excess Returns. Ground rules: 1, before we start, the group of us have agreed on a pre-discussed topic. 2, while we're live, nobody Googles nothing. And 3, we each bring a surprise topic to the table. The mission is simple. If we as professionals have to talk every day about this stuff in the real world, shouldn't we share how we talk to each other behind the scenes? Probably not, but we're going to do it anyway, because as Op Ivy taught us, all I know is that I don't know nothing, and we proudly concur. Let's click some beta. Who's with me today? Is it just my camera? Because he doesn't look synthetic. Could it be that AI actor / heartthrob / future indie movie blockbuster darling and part-time denim cowboy, Big Willie Norwood? Is that you with us? Oh no, my bad, but you must get that all the time these days. It's ETF.com's Dave Nadig.
I'm stuck on the denim thing. It's like I never know in one of your intros what I'm going to get hung up on, that I missed the next line because I'm like, what?
I stopped at denim too. You had me at denim.
You had me at denim.
I had to crowbar that in there, but I like this Big Willie Norwood character as I'm going to get something out of that. And who else is with us today? Let's wake her up, because September is officially over. And maybe not so surprisingly, September had more green days than red days. So let's rethink that one. Welcome to paradise, sassafras roots, maybe Russell 2000 light years away. I'm full of dookie. Luckily, she's not. New Edgewell's Cameron Dawson.
I'm just taking the long view, man. Taking the long view.
Oh, nice. Nicely done.
I was pretty proud of Russell 2000 light years away, which is
pretty good.
Possibly my favorite Green Day song. Oh, we'll save this. Maybe this will be part of the surprise topic. I'm going to rethink this for a minute. All right, so we're talking about the big topic, our government. They've shut down. And if you can't start a fire without a government contracted spark, what does it mean to be dancing in the dark with no data? We got permanent job cuts on the table, data blackouts for the Fed, payroll revision panicking, and labor market titanicking. I'll never let go, Jack Forehand. I'll never let go. Cameron, I'm going to ask you what you're thinking about in just a second. Dave, I'm starting with you. Politics. Should I put politics in my investing at all? When somebody calls you and they're like, politics are telling me what to do, do you have an answer?
Yeah, mostly you shouldn't. I think that's the answer I hear most often from advisors. It's the one I nod at. It's the one that if somebody asks me the question, I will say, no, you should be investing based on your risk tolerance, your needs, a general assessment of market, blah, 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 all the stuff that we all say to everybody. Boy, that's hard to do as an individual, though. The behavioral desire to do something when there's big news out there is really tough. So I think it's worth putting in context. Now that we have a government shutdown, which we've had a couple of before, we all know sort of what the game is here, to ask the question, like, okay, historically, should you have done anything during a shutdown? The good answer is that, across the last however many we've had, the answer is pretty much no. And I looked at all the shutdowns like I could get my hands on back to 87, and pretty much the market never does anything except during the 2013 when the market went up. So like, it seems like a fool's errand to try to game, whether the market is going to want to be pro or con, whatever shenanigans are going to happen during the shutdown. We all know the shutdown will end eventually. And if it doesn't, we have way bigger problems than listening to podcasts. So it seems silly to put your politics into your investing. But yet it is so hard not to. And Matt, I wanted to turn this right around on you. Like, you're in the space, you got clients showing up at the door, they have opinions about what's going on politically. How do you guide them about, like, well, should you be shorting Tesla and long that simply because you have emotional context for it?
For that conversation, it's what's the long view that you have here and what are you trying to express? Because you can have the greatest idea in talking to people where it's, you might want to express something, but does that actually align with what you're trying to accomplish? And do you have any edge in expressing that in this moment? On average, to that point you said, pretty much every single government shutdown has been flat. Round trip, 20-ish days, no return, some market gyrations along the way, which basically says, like, don't panic, but don't freak out or do anything too aggressive either. And if that's the general take, and with politics in general too, it's like, check your beliefs at the door and ask, does this align with my long-term views? And that might be some things you might feel a certain way about the administration, good or bad, and that might shape your views. But at the same time, it may or may not, and you may look at it and go, well, I kind of believe this with or without who's in power, or I kind of believe this with or without in my asset allocation framework, or what sectors I'm particularly fond of. And we try to steer people back to those core beliefs. Cameron, I'm kicking this to you. Like, does the government shutdown, what does it even mean to you when you look at that?
I mean, I think that if we were to take it from a really granular perspective, is there potential for this particular government shutdown to have a more lasting impact on GDP growth than prior shutdowns? The answer is yes, because they're talking about permanent firings versus just furloughs. And the thing about shutdowns to remember is that typically you furlough workers, they come back, they get back pay. And so, yes, there's some lost activity that happens when the government is shut down, just because it's sort of non-repeatable kinds of events that happen. But the point is that this time you could maybe see more lasting impact. Is that enough for you to have an investment thesis about? I don't think so. Because one of the things that we like to show clients around any kind of election is put in front of them the chart that shows effectively that no matter which combination you have of Republican House, Republican Senate, Republican President, Democratic, all the way down, whatever mixture you have of those, they all end up having the same effective average return over time within equity markets, meaning that the S&P 500 doesn't really care who's in power. It's going to keep doing what it's doing. Now, I think it's a very fascinating discussion to have of effectively saying, as we see more power get concentrated in the executive branch, which is something that has been going on for pretty much the last 30 years in a more rapid fashion than it did in the prior 30 years. What's it called? The unitary
Unitary executive.
Executive theory, like this idea of you're seeing more of it pushed into the executive branch. I think you might be able to argue that the gridlock kind of capabilities that keep Washington out of markets maybe are getting dulled, which might mean that our assertion that politics don't matter for portfolios maybe actually starting to decay a bit since you have this concentration, because in theory, the executive branch could push through more changes that could be either beneficial or detrimental to markets. I don't think we're at that state yet. Washington is still working its way through, the shutdown is a function of the gridlock, but I think it is a very fascinating discussion to debate of, if we fast forward 20 years from now, could we be in an environment where we actually have politics mattering more for outcomes for businesses?
Yeah, and we do seem to be remarkably disconnected. I mean, the number of conversations I've had that go like some version of, golly, everything's so awful, why is the market up, right? And people's awful can be personal or social or like literal, their personal business is doing terribly, whatever it is. But there does feel like there's this disconnect between how markets are reacting to political news and what's actually going on in economics. Is there a point at which things turn around and bite us in the you-know-what? I mean, I suspect that this shutdown will be around 12 or 13 days. That's what the Calci over-underline is right now on it, is 12 or 13 days. So I'm not expecting, to your point, Cameron, that this is when, the unitary executive shows up and all of a sudden whole divisions of the government get shut down forever and things like that. but we're getting closer to that. What is it do you think would cross a line? Is there a line? Is there a line that if it got crossed that the market would start saying, yes, this is a
I
problem?
My general rule in all of this is this is like the smell test rule for does it matter or does it not matter, is will it impact earnings? Like if you can't come up with a logical reason as to why something will impact S&P 500 corporate earnings, then it likely is something that should be faded. If you have to get to some wildly extreme scenario for something to actually impact earnings, that means that the impact to markets is literally just a sentiment hit, which tends to be temporary and can reverse as soon as other things are reversed. So here's the example. Everybody's seen that chart of whenever a geopolitical event happens, somebody will publish on X or Twitter, here's the average market experience after a geopolitical event. And the conclusion always is they don't matter. Well, that's not quite right? So they do matter. Certain ones do, and the majority of them don't. And what's interesting is that switching to geopolitical events, like the certain ones that do matter are the ones that impact oil prices.
Yeah, I was about to say it's got to be oil, right?
And because
Yeah.
that actually does have an impact on earnings. It might help the energy companies, but it really hurts the consumer where energy prices act as effectively a tax. So when we think about like why was the Russia invasion of Ukraine more impactful to markets? Well, because it impacted oil prices in a more meaningful way. So I think that's a great way to gut check yourself of saying, and it's easy to doom loop to find ways that it could impact earnings. That's easy to do, but I think if you take it from a rational perspective of, will this actually impact the earnings power of these businesses? And if the answer is maybe yes, maybe it has larger impacts. If we're talking about things like tax hikes on corporate taxes, like of course that would have a negative impact on earnings, and of course that would be seen as a bad thing. So by market. So I think that's maybe a helpful tool of kind of gut checking.
Yeah.
And I want Cameron, for you specifically on this, because I think the stat was every week of a shutdown, we lose like 0.1% of GDP or something like that.
Mm-hmm.
And okay. And I take it to this point that you made earlier about you're going to furlough workers. How do we know who's coming back? So obviously there's some hit on employment potentially that's in the mix of this one. These all feel relatively minor in the grand scheme of things. I'm with you. It doesn't connect 0.1% of GDP for 2 weeks, 0.2%.
Avril Lavigne, I'm with you. Sorry. Yes.
Thank you. If she's not a robot, but maybe she's the original AI bot for the artistry. One of my favorite
I'm just
conspiracy
saying,
theories.
see you later, boy. So whatever.
So long as you don't spell it that way.
I think it is worth noting that for people who are in the finance business, there are specific things in finance that get affected by a shutdown. Again, they may not impact corporate earnings. They're not going to make you want to sell the S&P 500, but, product approvals, right? In the ETF world, we're launching 3 products a day. That's been the rough run so far this year. A lot of that comes to a grinding halt because most of the SEC staff goes home, so they're not going to respond to anything. So we were expecting, for instance, a giant raft of new mutual fund share class, ETF share class spokes coming in. We were expecting a whole raft of Bitcoin related, or I should say spot crypto related ETFs that were going to come due. And all gets probably kicked out by however many weeks this shutdown goes. Again, that matters a lot if you're one of those people trying to issue those products and get them out the door first. I don't think it really matters to most investors. That's really the big one. The other thing that I worry about, because I'm a worrier about market structure stuff, is most of the SEC market monitoring staff disappears in a shutdown every time. So if ever anybody was going to try to be getting away with anything, it would be now, literally
That's
today.
the way.
So it's a Batman movie, basically.
Yeah.
It's like, yeah. All right. So is there anything that's non-oil related inside of some of the quirks of this shutdown that are on your radar? Because this is what my brain is kind of going where Dave's going with this question too. And I feel like, am I missing anything? Is there something else I should be looking at?
So I think one thing maybe just to flag, because this is probably the ultimate question for anybody kind of tracking and watching the economy, is we've been in what's well known as a little hire, little fire labor market, and meaning that you're not seeing people add a bunch of jobs, but you're also not seeing big job losses. So you're in an environment where the unemployment rate has stayed fairly stable, even though you're not adding many jobs because the labor supply has slowed so much. Now, where we have been adding jobs is in the public sector. Now, a lot of those are coming from local and state government, so not necessarily just federal government, which wouldn't be impacted necessarily by the shutdown. Though you're seeing things like, saying, hey, we're going to take $100 billion of infrastructure funding out of New York as like kind of a bargaining chip for, during the shutdown. So there could be some state and local impact. But the point is to say is that we've been on this kind of teetering point with the labor market for quite some time. And Neil Dutta will talk about the nonlinearity of labor market weakness, meaning a little weakness turns into a lot of bit of weakness. Kind of very much like Claudia Sahm saying, like, hey, once you get to a certain threshold of labor market weakening, you typically get a lot more. So this is where your countercyclical measures should start to kick in. So the question would be is that let's say we get these permanent firings. Let's say we get weakness in certain pockets of the economy. Does that become something that builds on itself where effectively you cross over a point where there's been enough weakening in the labor market that more firms look around and go, oh, wait, sales are weaker. Let's pull in a little bit. You haven't seen that yet. And I'm not making that call, but I do wonder if if you're talking about unintended consequences or potential broader impacts, could this be something that impacts the labor market in that nonlinear way? Maybe.
It's funny you mentioned the sort of whole, when it shows up into being a problem is when the weakening labor market starts turning into weakening demand and weakening consumer spending, and that means more firing. And so you get into a bit of that doom loop. But then I tease apart like the last GDP print. And as a non-economist, I looked at it and I was like, okay, so the entire economy is hanging on the back of AI CapEx and rich people spending. That's what it looked like to me. And I don't see
God bless
either
America,
one of those.
Dave. God
What?
bless America.
God bless America. Neither one of those seems like it changes during a shutdown in any way. Like the CapEx is still going to be CapEx, and all the rich people are still going to buy all their vacations and diamonds and watches. So that doesn't impact it at all. So if all the impacts might be in this sort of downstream, people who are doing the local projects that they're going to stop funding with the federal dollars, the healthcare workers, people at the bottom end of the economy, the below 50% line, well, they already don't matter to GDP prints right now because we've seen the GDP has shifted into a different direction. So even if we saw that, would it impact the market? I can't even make that case.
Here's a scenario. And this is going to be sacrilegious and offensive to anybody who has ever studied classical economics, but roll with me here.
This is what clickbait is for.
This is what this is for.
Sacrilege.
Fire
away.
Great Yeah song,
Yeah.
by the way.
Oh, nice.
To bring it back.
Yeah.
So let's say a scenario where this shutdown results in a little more labor market weakness, and that gives the Fed the green light, Lord, to go and cut rates. It's a Lord song. Nobody responded. Green light.
We're going to take it. We're going to look it up later and catch
fine.
ourselves up.
So it gives the Fed the green light to deliver more rate cuts. Now, the important thing to remember about that high-income consumer, the 10% of the consumer that generates 50% of consumption, top 10%, 50% of consumption, that is also the consumer that has been very much enjoying high rates. They've been clipping coupons on that huge money market balances that are very substantial income to this cohort of consumers. And what we can see is that growth in interest income to consumers has slowed from a peak in 2023 of about 22% year over year to just 1% today. So if you start cutting rates, let's say we get 100 basis points of rate cuts over the course of the next 6 months, maybe even more, maybe 150. Let's roll with it. All of a sudden, you're actually starting to cut the incomes to high-income consumers. And that, everything happens at the margin. And so, these consumers are much more sensitive to the wealth effect. Daniel DiMartino Booth will argue that the wealth effect is far more powerful for consumers with their cash interest income than it is from stocks, like the propensity to consume is higher. So at the margin, holding all else equal, their incomes growth at least is decelerating. So if you wanted something that said hey, how could this play out? I think that the Fed cutting interest rates this specific cycle, not all cycles, but this specific cycle could actually have more of a cooling effect for those high income consumers simply because they're going to see their cash interest income fall faster than they're going to see their cash interest expense fall, because they don't roll their credit card balances and they have termed out mortgages. So they're not going to get a stimulus boost from lower interest rates. Of course, there's like the trickle down effect from more profits other places, small firms do better, whatever it is. But I think from a personal household side of things, you could actually see it have an unintended consequence.
The discretionary spend part of that is one where it's like, it feels impossible to tease out, but that's maybe the most compelling case that I've seen, especially in an aggressive decline. Because that's one of the other weird things that we saw happen this week is like the shutdown happened and the odds for the next rate cut went to like 100% immediately. Am I see that right? And now they increased the odds for December. So it's like, all right, we're like officially in this rate cutting cycle. We have a data dependent Fed who maybe has some of the data to look out, maybe doesn't.
Let's get into that. If we did the last one on what do we trust, now we have nothing.
So we've officially canceled trust.
Right.
We've ruled it out. A data dependent Fed, like, are they reading the ADP? Like, where are they getting the labor data from? Where are they getting the inflation data from?
Bloomberg is amazing.
Yes.
They have, it was great. Mike McKee on Bloomberg was like, hey, well, just in case if you're looking for other data, they have a worksheet, and it's like the function is like worksheet ALTE, alternative economic data. And so they have this compilation of all the stuff that gets released that is not normal economic data. So one of the ones that he quoted this today was that, hey, people searching and going to the COBRA website. So when you lose your job and you're worried about your health insurance, you go get COBRA coverage as you're looking for a new job. So that has ticked up in the last week. This is probably like
pretty soon it's just going to be a Calci bet. And it's just going to be however people bet on it in Calci is what the Fed decides to do. Well, we got 75% thinks the labor market's crap, so we're going to cut. I mean,
and maybe it's just because I'm like extra aware of, because I'm interested in Calci and like the prediction markets and whatever else. But I heard at least 3 news sources in my email and in other places in the last week cite those numbers. Like prediction markets have the odds of the Fed, the shutdown, whatever else, and spouting it like it's a BLS survey.
It's the new normal. People are really paying attention to it.
It's been really normalized.
There's already a South Park episode about it.
Yeah,
exactly.
Well, but the thing that's surprising to me is like I've only just started poking around Calci and the prediction markets because they become so viable for so many investors. And Caleb Silver at Investopedia is like leaning in hard on every investor is also going to be a sports gambler and a prediction market player. So I'm trying to learn more about that. Like the numbers are huge. Like that last time I looked, there were several $1 million betting on the specific number of days in the shutdown. I mean, It's the amount of money getting tossed at wild prop bets is crazy.
Casino capitalism.
Yeah. Really.
Or degeneracy, but maybe some of each. So we had this was an offline sidebar conversation between us in prepping for this episode. But it feels like a weird thing as a professional. Like I wouldn't feel good about putting a bet on, for whatever reason, about the government shutdown, like the days that it's out. It seems something about it feels off.
The phrase that I stole from one of my favorite podcasts, The Emerald, I have no interest in profiting off the American wound. And that's what it feels like.
I mean, okay, so you know the whole concept of like you're like betting for a team, like your team is and you really are emotional. I don't watch sports, so I'm gonna try really
Phillies,
hard.
Red October. I understand. I'm wearing it all on my sleeve right now. I get it. Yeah,
means nothing to me, but yes,
it's okay. I'm emotionally invested in something that's not.
You're emotionally invested in something, and so you're gonna take a bet against yourself, so at least you're not totally be crushed.
Totally. Right.
And so, you know, I like maybe there's an aspect of this feels very nihilistic, but
I mean, it's basically no different than like buying suicide puts when the market's roaring up and you're just like, I just need to buy something on the other side because this feels too much.
Some insurance must be cheap somewhere. And maybe it's emotional insurance. Maybe that's all it is. So I'm not betting in the prediction markets in any way, shape, or form as of yet. Not saying I won't, not saying I'm not tempted, not saying I didn't look at the Phillies odds when I was parsing the Fed cuts and all the other crap today and went like, oh, really? They got the bye week so that their numbers aren't going to move? And friggin' LA, because they got, lucky against poor Cincinnati, is shooting up as like odds of, So I'm looking at these things, but I haven't done it yet. Dave, have you wagered any bet in this
No,
space
I have
yet?
not. I mean, I don't mind gambling and I love playing
No.
poker. So it's not like I don't have like a moral objection to the idea of making a
All
bet.
right.
If you want
Cameron, are you in?
a fun fact, the way that Dave wins poker is by being
Uh-oh.
fueled by great 80s goth rock.
Yes. Yes. You are my
That's the poker strategy.
That's the
80s
poker
goth
strategy. Yeah, no, it triggers something in his brain, and that's what makes him
It's called
unstoppable.
autism. You can say the word out loud.
I mean, that's a poker strategy. If I could get behind a poker strategy, it might be that. Cameron, are you betting in any of these markets? Are you playing with any of this stuff?
No.
Do you have
but
any
my
draw
grandmother is
to?
a really big Phillies fan, so there's
There you
that.
go.
She's a huge Phillies fan. I think I could make the argument that between the Phillies and the Eagles, she's probably one of the oldest and most ardent Phillies sports supporters. I should write a letter or something. She's incredible. She never misses a game.
Amazing.
Fantastic. I love it. I hope she was there. They just did the like the Phillies versus Phillies night that they don't like advertise or broadcast the other night. And I really wish I would have known exactly, since they had the bye week. So basically like the main team plays the reserve team to just stay active when they're on the bye. So it's like $10 tickets, cheap hot dogs. Or
That's
whatever.
really fun. You get to
Pure
go watch
fan
practice.
service. Yeah, you get to go watch a live practice in the stadium. I love stuff like that. Yeah, we'll have your grandmother on for one of the other shows. This
Oh,
sounds
man,
like a
she'd love
great
that.
time.
She'd love that.
So is there anything else with this? Like, keep your politics out of your investing. We're in the middle of a shutdown. Basically, don't freak out because corporate earnings aren't freaking out. I know you've been writing about this a lot, Cameron, but that's feels like the theme coming into the end of 2025. Earnings haven't slowed down. Shut up. Go do your thing. So what if the Mag 7 or no, what is the top 10? Like 38% of the S&P now? It just keeps on getting higher. Just ignore all those things because earnings are okay. Is that where we are?
And that how Michael Semblis put out a piece, you called it the data center blob, how the AI related names have contributed 80% of the earnings growth over the last 3 years. 80%. So, and one of the things that we've been flagging is that, you've seen this really sharp underperformance at the average stock. Breadth still remains kind of anemic in markets, and saying it's because if you look at the S&P 500 benefiting from that top 10 stocks, its earnings estimates are getting revised higher. But if you look at the equal weight, which is normalizing everything, its earnings estimates are getting revised lower, which one of the things we're doing our outlook on October 8th, I believe it is. And the whole theme of the outlook is this idea is that it's a very common trope that the market is not the economy. And so we'll all say, okay, this is why we have this divergence. The market's not the economy. But what we actually are seeing now is that because the market has been so strong, it has actually become the economy, whether it's looking at the concentration from GDP growth that we're getting from AI, but as well as just how much that high income consumer is reliant on this equity market still doing well to kind of fund and fuel optimism and consumption. And so where, yes, they are different, they have merged in a way because growth has become so narrow, not just in capital returns from the market, not just in earnings, but now also GDP.
All right, I'm ready for surprise topics.
Can I go first? Because it picks up right off where we just left off.
So this is going to be Depeche Mode and poker? Like where are we?
Nope. We were you're just talking about the AI cap spend, right?
Perfect.
So I've noticed in the last week a huge narrative shift. Today there was a big article by Derek Thompson, but there was a Wall Street Journal article. There were a bunch of stories earlier this week, all sort of talking about how the AI bubble will burst. And like that's an inevitable story anytime we have a run in any part of the economy. But here's the part I hadn't thought about. That one of these articles framed for me, and I apologize for not having the reference. If in fact this is a bit of a bubble, and all this CapEx, $1 trillion of CapEx gets dumped into these data centers and the build out of the models and the AI companies themselves, and what happens if it turns out that after spending all this money in a year, say from now, it's not that AI isn't amazing, and it's not that AI isn't transforming the global economy. It's just that it's impossible to contain, and that all of the spend gets done. And then it turns out it's kind of like the internet in the sense that it becomes ubiquitous. It becomes part of everything everybody's doing, but it doesn't accrue to any individual player enough to actually create those over-the-top winners, right? So the railroad story is a great example for this one, because at the peak, there were, 2,000 railroad companies. None of them ended up actually being great long-term investments. A few robber barons got rich. Most investors from that period got wiped, right? So an enormous amount of capital destruction actually happened. Same thing happened with weight division, multiplexing, and fiber, which is the other example everybody uses, is like an enormous amount of capital actually just got wiped. And that really acted as a kind of wealth redistribution. So is it possible that the AI bubble bursting might in fact be one of the most progressive wealth redistributions of the 20th century?
That's a take. I will plug, Derek Thompson did the railroad guy, like one of the railroad historians on the episodes of Plain English. That was really great. I have a weird fascination with railroad history.
Yeah, no,
really
me too.
Well
so I think we were reading the same thing.
Okay,
anyway, what's your take?
I mean, we know who the robber barons are in this scenario. So let's think about that. We know who's getting rich.
Except they're not building libraries.
They're not building libraries yet.
Or museums or beautiful universities.
Yet.
No, they'll put their name. They'll put their name on something, but maybe not of the same posterity that the museums have. I think this is really interesting, and I think it's really interesting that we're talking about the end of this bubble. I feel like I don't know that there was another case where we were so actively not cheering for the end of a bubble, but describing the end of a bubble and what the ramifications are.
Oh, dude, I don't know. Didn't you live through 98 to 2001? It feels like the same 3-year window all over again. Okay. Everybody wanted it all to go down.
I was not plugged into this world when I was, because of the age I was, and because of that, like that's high school into college, and it was just not enough on my radar. So I asked this question, market historian Dave Nadig. You're telling me people were just endlessly rooting for it?
You just okay boomered him, but yeah.
I did.
Well, no, I just remember literally in 1999 standing on the floor of the New York Stock Exchange listening to Kramer talk about how all these internet stocks were a fad and that, like, you're hitting the button and stuff. Like, yeah, it felt exactly like what we're seeing about AI stocks. The only biggest difference is that most of the stuff that is in a bubble right now is probably private. Right? Like OpenAI's valuation is probably the thing that's the biggest bubble, but none of us are playing in that.
So one of the things that I wrote about last week was this idea that bubbles can happen in earnings. When we think and conceptualize a bubble, we'll often talk about valuations. And yes, like bubbles happened in valuations coming out of the pandemic, where you saw Zoom trading at like 50 times sales or something dumb, right? Like that was clearly a bubble in valuation. And of course, bubbles happen in valuations of the low quality stocks that were part of the tech bubble, right? So if you didn't have earnings, or you only had a little bit of earnings, of course, your soaring stock resulted in a big high valuation. But what people don't talk about is the over earning, or the bubble that happened in the earnings of the CapEx infrastructure players in these areas. And this is what you're talking about. This idea is that right now we're clearly in the CapEx phase of this cycle, where you're building out the infrastructure. And what's interesting is a lot of this CapEx is all kind of being sold to each other, and there's a very circular reference aspect of it, and kind of winds its way up. But what we learned from the internet is that those that benefited from the CapEx build out and the over earning that happened from that were very different than those that benefited from the ultimate application. And that the early application folks that saw their big, huge valuations on little tiny earnings also saw their prices decay materially during like the unwind of the 2000s bubble. Some of them, of course, emerged and became big players like an Amazon, but some of them went away, like pets.com, right? So I think that knowing that a bubble can happen through the earnings line and over earning is a really important caveat in how we navigate this, because as soon as that, the second derivative has already slowed in the growth for the CapEx oriented side of these things. But as soon as that starts to taper off and turn more sideways, potentially that growth rate slows even further. You're going to have, I think, probably some kind of awakening to go, oh, yes, okay, we probably aren't going to be selling to as much to each other as we did in the past. Problem is, when does that happen? Because we keep coming back to this idea of like being early is the equivalent of being wrong. You bet against this today. You could have actually made this same argument at the beginning of this year or at this time last year. And so how do you make sure that you're still dancing while the music is playing, and not being caught, flat-footed, standing and tapping your foot on the sidelines, saying all these, all these dumb people doing the jive. You have no idea what you're doing. So I don't know. I think that knowing that the spoils and the benefits of the technology may not accrue to the obvious players today.
I lost so much money on this, so that I feel like I can say that with authority because I made all of those mistakes in the 90s. Like, I mean, I was loaded up in my portfolio as a fund manager, like publicly traded, with Lucent, JDS Uniphase, MCY, UUNet, Wintel, like all these names nobody knows anymore because they all either went bankrupt or got bought. That was my portfolio. And it went up 190% in 1999 and then went all the way to zero in 2000. Like, how does it not feel exactly like that? Right? These are companies that made a lot of money on the build out and then had nothing left to do.
So is it with the largest of the large companies, so those top tech players, where it's just, even if the baseline earnings growth isn't as strong from this point forward, do we look at companies like that and just go, great, your valuation is going to come back in? Google, Amazon, Apple, Microsoft are all going to have these baseline like earnings, and they're not going to be zeroed by this. Probably a bunch of private players get zeroed. Back to the wealth effect, all the people who have the private capital wrapped up in these private deals doing these build outs, maybe those are the ones who get hosed.
Yeah, small data centers, things like that. I mean, a lot of this is happening in private placements. A lot of it's happening in private credit. Like a lot of the funding for this is happening through Apollo. I mean, you start looking at the stuff they're sticking in the ETFs. It's like Intel's data center in Ireland and stuff like that. That's what it's all funding. So again, maybe those guys get wiped out and it just acts as wealth redistribution because we all get the benefit of AI in our businesses, but we underpaid for it. I mean, look, I know I'm massively underpaying for my AI use right now. The amount of value I get out of my $20 subscriptions is insane. And that's being paid for by somebody.
But there's so much competition. Why would you start paying full price?
Right.
Like, because everybody is competing in order to get to this ultimate goal of AGI or super intelligence. I don't know if you get to a place where people are ever fully paying for the full power that the AI is providing to them.
Well, but the money has to come from somewhere.
Well, yes,
So it's
yes,
coming
but
from VC,
meaning that
right?
that I guess the way I would put it is that all of the legacy businesses that are spending all this money are effectively each have their own near monopolies. And now they're investing money in something that's far more competitive.
Mm-hmm.
And so that tells you that the returns on that investment are likely lower than when you were investing only a little bit in order to generate. I mean, look at a name like Google, right? So what's fascinating is if you look at Google's earnings, its earnings have grown substantially over the course of the last few years, and its free cash flow is down.
Right. And we see this over and over again. Like you look at a bunch of names across the space and you're going to see a version of this story because it's just a hard business environment.
I mean, and if you look at where a lot of this funding is coming from, and this isn't a new observation, like people are just showing up with cash to buy NVIDIA chips top to bottom, right? Except for Oracle, which is actually going to have to go out and raise some money to play in the game. But to date, like when Apple needs to spend $1 billion on some stuff, they don't have to float a secondary. They've been sitting on this cash forever, right? So does this flush some of that out back to the rest of us? I don't know. It was just a dumb idea.
Oh, well, I mean, but I think it's also kind of peculiar that now you are starting to see them spend less of their own cash and more of other people's cash. It's different, right? Like Meta
it's a
going out
shift.
being like, hey,
It's a
Blue
shift.
Owl, like let's build a data center together. And I go like, why do you need mine? Why do you need my money?
Right.
I thought you had lots of money. I thought you were a cash flow generating machine. And like, look, weighted average cost of capital, it might be the right thing to do, but I think it's an interesting change. Is it the harbinger of an imminent end to this? No. But will it eventually likely, come back and bite returns?
Probably. All right.
It'll be good for the investment bankers and the corporate attorneys,
Like it always
everybody
is.
else, like it always is. A tale as old as time.
Beauty and the Beast.
Yes.
I
got
figured
one.
I had to announce it since all my other references.
Just flying right
fallen
past us.
flat.
I just think you're switching between thinking about music and trying to make sure I'm paying attention. Who's got the
getting
next one?
references.
Who's got the next surprise question?
You go next.
All right. I got one, and this was in I think Cameron, I think it was you in the conversation before this. I think you made the Dancing in the Dark reference. So
Yes.
can I give you credit for this? Do you guys know the story of that song, like where that song comes from, which is fantastic? So you basically have, he's making Born in the USA. John Landau, whoever the producer is like, we don't have a single, the classic like 80s rock star story. We don't have a single. He's all dejected. Bruce goes back to the hotel room that night, shows up the next day with Dancing in the Dark, and the rest is history. So here's, not to torture the question into something else, but like that, this isn't good enough, go back to the well, and then you produce gold thing. The obvious investor problem, and the thing that I worry about with clients all the time, is it's like they have a good thing going on and markets are doing good, and they're like, I'm just going to go back and write my hit. Like, I don't have my hit song yet. Doing really good. I got Born in the USA in the bag. This is all coming together. And now I'm going to go out and find a hit. That's tempting and dangerous thinking. But then in regular life too, like, do either of you have a story where kind of like, you're like, it's not good enough yet, you went back home and then you came back with your best thing overnight in the middle of a project? Either of those ideas resonate?
It resonates for me personally, but I don't think I have an investor angle for it. Like,
I don't need one.
As somebody who does a lot of writing,
Yeah.
it took me a long time to do this, but when I was younger, I would write something, here's my 3,000 words, and it was as if God had come down and delivered tablets on the ground. And if some editor came back and said, you know, the first 300 words are a little long, it's a lot of throat clearing there, can you tighten that up? I would be like, are you insane? Do you not know that I am an artist? Right? It was insane. As I've gotten older, and I've had a couple of really great editors, particularly I'll highlight Laura Krieger, who's no longer working in finance, but was an amazing managing editor for years at ETF.com. She would finally, because we've known each other forever, about 8 or 9 years ago, I would submit stuff and it would be garbage. And she would send it back to me and be like, you can do better. Yes. It's like
Just a quiet
little pat on the head. You're a good writer. You're a great writer, Dave. You can do better. And like those, I got a couple of those from her, and it totally changed my process for writing, where now I am much more deliberate about, like, I write a thing, I put it away for 3 or 4 days, I come back and I read it, and I can always do better. But I never used to be that way. So like that whole, like, you can do better thing, I think is actually really important for anybody in the creative process.
I have
like
two
that.
responses.
Please.
One, LCD Sound System has a great song about this called "You Wanted a Hit," and
I
it's
know.
absolute
call out.
banger live. Yeah, we won't be your babies anymore. Number two, I will never forget. I was so excited. It was my first piece that was going to be published more broadly when I was at Bank of America, kind of to our whole client set. And I'd written this piece about the industrial sector, and I had all these different references in it. There was a Shakespeare reference, there was a Dolly Parton reference. There was,
I'm not surprised by any of this so far.
like,
All the
it
key
was-
touch points are in there.
and I was so proud of this. And I handed it to my professor, Dr. Singleton from business school. And I said, hey, would you read this? And he looked at me and he goes, do you want me to read it? Or do you want me to read it? And I was like, no, like, give me your notes. And when I tell you, he redlined my baby.
Yeah.
To an extent that I never expected. And I was so crestfallen, but he was right. And what I realized is that one act alone, him taking the time to edit something, I've hopefully never made those same mistakes in a piece ever again. And I always write with his voice in the back of my head of, like, you're bearing the lead, you're doing this, like how do you structure something so that way it's easy and, like, enjoyable to read. So anyway, I'm so grateful because it didn't take much on his part to, like, open my eyes to how crappy I had been approaching it, even though I was putting in my full effort. So yeah, sometimes you got to go back to the drawing board.
I feel like it's actually now harder to do the other side of it. Like, I get handed a lot of other people's work, or people ask me to read something. I have a bunch of people I sort of mentee in their 20s and stuff. And I used to try to be a little bit more, like, delicate. I mean, Cameron, you know this. You've asked me to read a thing or two of yours. Now I just crap all over whatever anybody sends me. Right? Does not matter who wrote it. It could be freaking Jason Zweig anonymously, and I would just rip it apart, good or bad, because I've learned from the other side of that God, my work always gets so much better when somebody is willing to take even 15 minutes to find everything I did wrong or not as well as it could be done. So I just think there's huge value in it.
I couldn't have done it without you. Just for the sake of the audience, Dave helped me immensely with a commencement address that I gave earlier this year, and I gave him a draft of it, and it was redlined, and it completely changed. I could not have done it without Dave, and I needed it because sometimes when you're stepping into something that feels so weighty and you feel this pressure as if it needs to be perfect, that pressure can make you freeze and overthink things and get wedded to one idea that may not be the right way, or not right or wrong, but the best way to be able to approach something. So I couldn't have done it without you.
No, great.
Very
What
grateful.
do you got? What's your special?
So, okay, this is not investing related, but maybe there is an angle here, which is I practice a lot of yoga. I love my yoga, and my favorite thing about my yoga studio is that it's a silent room. So as soon as you walk in there, there's no phones, no talking, no chit-chatting. The teacher obviously talks through the class, but it's sort of this sacred space. And it's a very funny dynamic because occasionally there are people who do not respect the silent, sacred space. And there's this piercing, even the slightest whisper. It just pierces through everything. And it's one of those things that will immediately get me out of any kind of like a flow state that I was in. I'm like, is this sort of the challenge? This is what we're having to learn to zoom everything out. But it made me think about, are there different things that normally you wouldn't mind somebody whispering, but because it's in the context of something that's forbidden, you're not supposed to do this, or it's in like this kind of pristine, no speaking kind of zone, that a little whisper can become that much more just annoying. So I don't know. I was thinking about it because I was trying to say, like, should I be the person who shushes? Because that's
Are you a
other
shusher
people.
or are you a shushy?
And the thing is, I'm not a shusher. I don't want to be a shusher because if somebody, if it's their first time, I want them to know the rules. I want them to respect the rules, but I don't think it's my place to be a shusher. So I don't know. I almost shushed somebody over the weekend, and I was so tempted to
You
do
need a
it, but I was like,
professional shusher. Got to be
I
somebody's
kind of
job.
feel like I don't want to step into that role. That's not who I am. I'm like, live and let live, man. I don't know. But I guess I'm wondering if I should shush.
I mean, I'm pro at least one shush to set the tone of this is the setting we are in.
I do a cough with eye contact.
That's acceptable.
Ah,
That's an alt shush. Yeah, there's nothing wrong with, I think, the
An
cough
alt
with eye
shush.
contact. Yeah.
the alt shush. I was going to say my direct experience of this is sitting in a Zen monastery.
So you
for
do the silent
meditation.
retreats, so I feel like you
And-
have
and-
to tell us.
The odd thing about particularly a Zen silent retreat is it's very rarely silent because there's bells and there's people, like there's always something going on. And then there's maybe 10 or 15 minutes where it's totally actually 100 people in complete silence. And then somebody hits a bell or this giant wooden block called the Han, which makes all this noise. But in that environment, I have found myself losing my goddamn mind over the person sitting next to me breathing too loud. So yes, I know exactly your experience because I have sat there for days going, if I have to listen to this person go one more time, I'm going to lose my shit and I'm going to run out of this Zendo and never come back. So yes, the smallest thing that is a violation of a supposedly sacred space, I lose my damn mind. I've gotten better at it, but the first couple times I was just like, if he sneezes, I'm out.
Hey,
I'm also with you on this because I think it's really hard to find spaces like that. And I cherish mine on a trail, like go out for the hike or whatever else. And I have different trails where I know I'll run into less people. And a week ago, I'm doing one of my favorite trails here in northeastern Pennsylvania, not far from me. It's like painfully close. Something that every time I do it, I'm like, I could technically be here every day. It's that close. And as I'm going through part of it, I'm it's that time of year where stuff is starting to grow in or whatever. I'm totally going to get a tick on this walk. Is this really worth it? Because the grass is overtaking parts of this trail and whatever else. And then I'm like, there's no one here. It is just me. And this is so special. And by 10 minutes into that walk every time, it's the best therapy I can do for myself. And then once in a while you come up on somebody and they've got their cell phone out and they're playing,
Oh God, I
Credence
hate that.
while they're on the trail. And that's literally where can I sneak up on them and just slap the phone out of their hand?
Now, if they were playing Creed while on the trail, completely acceptable.
And murder.
Imagine
Yeah.
being in a forest singing One Last
Can I
Breath.
take you higher or whatever?
My sacrifice.
I have to
Come on.
reject.
Thank
I have to
you.
reject
Thank you.
your attempt here.
with arms wide
There
open.
is no excuse for playing music out loud in public unless it's a very specific event. Everybody has
Or
headphones
Creed.
now.
Or Creed.
Or Creed.
Yeah. I have an offline funny Creed story for you. It'll be an offline story.
But you need a professional shusher in those situations. And
Yeah.
You need to be-
There's a person whose job it is to yell at them.
Yeah. Somebody has to preserve that because that is the value of the space and the value of the space that you're receiving by being there. And if that's not respected, then what is it anymore?
One of the most bonkers things when I go back to Florida is I'll go and practice yoga at my favorite studio. But it's amazing to me. They don't have a no talking rule. So you're in this really peaceful room and you'll hear people talking about what they ate for breakfast. And as you're trying to kind of like start the class,
Really?
it's the wildest
Sounds kind of
thing.
fun though. Sounds kind of fun.
It's not fun.
No.
It's not fun. No, it's the only thing I would change about that studio. Only thing.
I'm
You
kind of
gotta hear
anti
some-
small talk anyway, but
Kind of anti-small talk. I like eavesdropping on like really bizarre small talk though. I want to sit in the diner.
for sure. Like,
And
put
I
me
want
in
to
a
hear
cafe,
like
listening to overhearing the people next to me. all day.
overhearing people saying crazy stuff. That's a guilty pleasure.
Yeah.
To enjoy that. So I think we solved the problems of the world, right? Did
Oh,
we
yeah,
reopen
for
the
sure.
the government's going to reopen after they listen to this?
We got the shushing
If it
down.
does or doesn't.
Yeah.
We're good.
One The Voice Norway. Did you ever hear that version of Dancing in the Dark of like the kid in a shirt that I swear I had when I was in high school?
No. The Voice. How do you end up watching The Voice Norway?
Because I tell somebody about Dancing in the Dark and they're like, I have the greatest cover version of this song ever. And I go, that's a bold claim. And then I listen to it and go, I think I'm crying. It's
Okay,
a
I
solo
will go
acoustic, very quiet. It would play well in like a whisper only setting. It's extremely delicately done. And it changed I hear the song differently and I want to hear that song every time if I think about the original.
Lucy Dacus has a great
Oh, yeah.
Dacus has a great cover.
Oh, I'm a huge
She's
fan. I'll go listen to
phenomenal.
that.
Yeah. We need a new Boy Genius record. Can we just lob that?
We
out
do.
there
We
for
do
that?
totally need a new.
We're
Boy Genius.
due. We're
But-
due for a new Boy Genius.
Although I think they had a falling out. I thought Phoebe Bridgers had a falling out with one of the other ones.
There was some weird stuff in the videos for the last album. It's like this took a turn. Really wasn't planning on this, guys. All right. The boys grew up, I guess. Fair enough. I could still use another one. Dave, hey, ETF.com. I mean, congratulations. I don't know if that
Thank
was
you.
official
Yeah,
last
that's where
time we
people can
recorded.
find my stuff. Dave Nadig on all the socials, ETF.com for the real stuff.
Fantastic. Cameron, they want to bug you online, ask about what goth bands to play when they're playing Dave and
Or just
poker.
shush you.
Or shush
Or-
you.
I'm
Or
gonna
should they
get
look
so
you up
many
online?
shushes now. I'm not good. For the record, everybody, I'm not a shusher. I don't shush.
Alt shushing approved. Cameron Dawson. If they should bug you on the internet, where should they look you up these days?
LinkedIn, I am kind of on X, but not as much anymore. But you can also go to the New Edge Wealth website and sign up for our newsletters.
Make sure you get those weekly newsletters. They are well worth your time from you and all your co-contributors. Lots of great stuff there and lots of great music references. Did we close the loop on when September ends in Green Day? Was there any closure to that arc from you?
No,
we're
because
just letting
as we discussed offline, Green Day is a manufactured post.
Also, it's now October.
It's also October.
All right, we're taking the long view. This is Click Beta. We'll be back in a month. You guys are the best. We are.
Thank you for tuning into this episode. If you found this discussion interesting and valuable, please subscribe on your favorite audio platform or on YouTube. You can also follow all the podcasts in the Excess Returns Network at excessreturnspod.com. If you have any feedback or questions, you can contact us at excessreturnspod@gmail.com.
No information on this podcast should be construed as investment advice. Securities discussed in the podcast may be holdings of the firms of the hosts or their clients.